Hi, welcome to Neppy Invest. Time for week 8 update to my momentum sentiment portfolio. Could have been a busy week for the portfolio. 5 potential buys, ended up only being 1. And one of those potential buys, I actually even put in a bid at 46 cents. Then I cancelled it at the last second. And then I saw the share price rise from 46 to 55 cents, but no regrets. That's my motto, and there is a reason behind no regrets. So for those who don't know anything about this portfolio, I'll do a very quick little breakdown of what it is. So it's based off a strategy I began in about 2013, and I use a couple of things. I use a technical signal, so I'm looking for companies whose share price has been in a downtrend. It looks like the share price is turning into an uptrend. So I'm looking for sentiment momentum shifts. I'm also looking for news items, announcements from companies that are quite bullish, in particular profit or earnings upgrades. And when you combine a profit or earnings upgrade with a change in trend of the share price, it's quite bullish, and I've found that to be a very successful buying strategy in the past. So this portfolio began in August 2020, and the ultimate goal is to double market returns. And I'm doing that quite well at the moment. I think I am doing that. Again, this week I only made one buy, and I'll get into that buy in a second. But before I get to that buy, first of all, I'm just going to look at the overall market. So looking at the overall market, I look at the XJO. Sometimes I look at the All Ordinaries, which I think is XSO. But I'm just looking at XJO for now for some reason. Anyway, the XJO did rise 1.4% in the week. So that's a good rise in a week. And it seems to be trading in a trend between a range between 6,600 and just shy of 6,800. So in the future weeks, if the XJO breaks above 6,800, that'll be very bullish. And on the counter side, if it breaks below 6,600, that'd be quite bearish. So keeping a close eye on the overall market, simply because I am being very cautious at the moment because the markets are quite overheated. There's a lot of exuberance in the market, and I think in that sort of instances we can see a correction. Now, no point selling out just because there might be a correction. I believe you should just wait for that correction to start happening because this bull run could continue for a while simply because governments keep doing quantitative easing. Now for the buy I made this week. So the company I did make, or the acquisition I did make this week was brainchip. So this company doesn't really fall into the usual sort of company I to buy. So I usually buy companies that have revenue, are profitable, and the sort of companies I don't really have to focus on the share price every single day. I can just wait a week and see what the share price is doing after that week. So this is a sort of a different sort of buy. I'm just testing out this new strategy. I don't think I'm going to be doing this strategy all that often because it's a more labor intensive sort of strategy because I have to follow the share price every single day. So brainchip, it doesn't make any revenue. There's a lot of potential behind the company, but wouldn't be surprised if the market cap of the brainchip went to $10 billion or went to $0. At the moment, it's about 500 million, or maybe it's more than 500 million now. That's pretty high for a company that's not making any revenue. So a lot of potential, and the market is pricing that potential at the moment. So I did make this acquisition based off the share price, not the daily share price, but 15-minute share price. So I'm looking at the 15-minute charts. And when you're looking at the 15-minute charts, that's much more intensive. So this is the 15-minute chart, and I'll just talk about why I did make the acquisition when I did. So I bought at 47 cents towards the end of trading on Thursday, the 7th of January. So on the Christmas Eve, there were a couple of announcements they did make were quite bullish. And what I was looking for with the share price action after the announcements was no significant decrease in the share price. And we didn't see that. In fact, we saw the share price base at around 43 cents or so. And that's actually really good news for the share price because that means even though there are sellers are being met by buyers, and that's really good. And what I was waiting for then was the share price to break out of that base. It looked like it did towards the end of closing on January the 5th. It looked like it was going to go up. So it went up from 43 cents to about 47 cents. And then it went down a little bit, but then it based around 45 cents. So what I was looking for on the 7th of January was a bit of an uptick in volume. And we saw that uptick in volume towards the end of closing. And that uptick in volume was met with a good share price rise, a very sharp share price rise. And right at 47 cents, I thought this was going to start breaking out. I didn't realize it was going to really break out on the next trading day. And we did see the share price rise about 20% on January the 8th, the Friday. So that was just a very fortuitous buy. So the overall gain for brainchip for me right now is 24%. Wasn't a very large holding, so I only bought about $2,000 worth. But at this point in time, my sell strategy is if it goes below about 48 to 50 cents, that would be when I sold out. So at this point in time, this will be a profitable trade for me. Now let's get to companies that I've already got a holding within this portfolio. So Dusk was one of my most recent purchases. So I bought this off one of those very bullish announcements I talked about before. So the share price went up to about $2. And I was just being a little bit patient on the day, but I wanted to buy if the share price went below $2. So I put in a bid at $1.98, and lo and behold, towards the sort of middle of the day or towards the end of the day, it did get down to $1.98, so I did buy in. And then the share price finished the week at $2.02. It was a very bullish week we had. Share price rose about 15% or so and finished at $2.28. Now, there was an announcement. It wasn't a price-sensitive announcement, but it was Wilson Asset Management Microcap increased their holdings to 6.72%. And I'm thinking that had something to do with the share price rise through the week. Wilson Asset Management is a very highly thought of fund manager, so the fact that they're buying or increasing the holdings is actually quite positive in my books. So at the moment, very happy with the Dusk holding. My sell strategy is this: if it falls below $1.90, that would be automatic buy. I might increase that sell strategy in the next few weeks, especially if it keeps going up. I made another acquisition on December 29, and that was Smart Group. This has done quite the opposite to Dusk. It's actually gone backwards. So I bought it at $6.94 and it finished the last week at $6.75. So I've lost 2.8%. So nothing too significant there. You can see the share price hasn't been doing that much, so this is not a bad situation. See the share price pull back a little bit, moving towards the 20-day moving average. And I think once it gets to that 20-day moving average, the share price might start going up again. Now, this is in the same area as SG Fleet, and SG Fleet also had a down week. So I think companies within this sector all had a bit of a down weeks. So the next company is Energy One. So I bought this at $5.50. Yes, it was also after a very positive announcement, a few days after the announcement. I decided to buy half because the share price had run up quite a bit following the announcement, and I thought the share price might pull back a bit. So I bought half my allotment at $5.50. Half expecting it to go back to about $5, and that's when I'll buy the other half. But it just kept on rising, the share price did. And at the moment, it's trading about $6.15, so overall gain of 12%. We've share price now sort of base over the last week and a half between $6 and $6.50. So again, that's very positive to stay with that within that trading range. And if it fell below about $5, that would be a good place to sell. So at the moment, I am thinking of raising my potential sell price a little bit, but in fact, if it goes to about $5, I might still buy my second allotment. So I really haven't thought about that yet. But at this stage, if it falls below $5, that might be a bit of a sell because that would be very bearish. Gentrack, I bought around the same time as Energy One. This one is a little bit of a sus buy. So I bought this at $1.41. Current price is $1.40. So it really hasn't done anything. It's quite volatile. You can see it's going up and down quite a bit with price. It does look like the share price does want to change into an uptrend. It's struggling, it's getting there, but this company I think is cheap for the potential in the future. But I just don't want to hold because it has potential in the future. I want to hold as the share price starts to run up to when it's fulfilling that potential. and at the moment I'm not sure that's going to happen. So this is a potential sell, particularly if the share price falls below $1.30. That would be automatic sell. But if it can't quite get above $1.50, $1.55, that would be also a sell, but it could be starting to try to trade within a range at the moment. SG Fleet, I already mentioned that Smart Group is within the same sort of field as SG Fleet. And the share price did drop from $2.47 to $2.35. Still overall gain of 8% with this company. Now, the last trading day was almost a hammer. You probably could argue that was a hammer. A hammer is when the low of the day or the close of the day is much higher than the low of the day. So the low of the day was around $2.27, then it closed at $2.35. And that means there's a bit of buying through the day. When the share price fell to $2.27, someone was buying a lot, and that pushed the share price up. And that's usually a very bullish candlestick. And so I'll be looking hopefully for the share price to do a bit of a rebound over the next week or so. If the share price fell below about $2.40, that would be a sell, and it's at $2.35 now. So it's almost at the sell point now. So that's why I'm very interested to see what the share price does in the next few trading days. If it struggles to get above $2.40, that might be a sell signal for me. And look, overall gain of 8%, so it's not that bad. BlueScope Steel. So this was the first buy I made in the portfolio. And I made this at $12.34 on the 12th of August. Now, I've been waiting for the share price to go above $18 because that $18 was a very powerful resistant level, a 10-year high, and it's been struggling to get above $18 ever since the middle of November, so 2 months. You can see on the last earnings upgrade in the middle of November, it got to about $18, then pulled back. And ever since then, every time it gets close to $18, there's a bit of selling. Now, 2 days ago on would have been the 7th of January, it opened above $18 on good volume and it stayed above $18 since. So I've actually moved my sell strategy to $18. So if it now falls below $18, that would be bearish because $18, instead of now being resistance, it's now support. So my overall gain on BlueScope is 51%. And the fact that I've been holding this for 5 months now, to get 51% in 5 months for a company like BlueScope, I'm very happy with that. You can't be unhappy with that. So this is the sort of reason why I'm doing this strategy, is to buy companies like BlueScope. And if you ask a lot of fund managers, experts, they'll say BlueScope is definitely not a buy. They'll say it's too expensive, that sort of thing. I've actually seen that. Some fund managers say that they wouldn't buy this. But when you get a 51% gain of a company like BlueScope in 5 months, and if you can do that over and over again with companies like BlueScope, that probably shows you that this sort of strategy can work in the long term. The only question is when to sell. And at the moment, my sell strategy now has been pushed up from, I think it was around $16.50 or $17, has now been pushed up to $18. South 32, I made the South 32 buy around the same time as BlueScope. It hasn't been quite as successful as BlueScope, but still up 15%. It was trading in a range for a long, long time, then broke out on large volume. I've got that listed there around the middle of November. And then it's been was going up for a while, and looks like it might be trading through another range right now. So I'm willing to hold this for a while just because I think there is long-term bullishness with the share price of South 32 over the next few years. And if it remains an uptrend, I'll just keep on holding it. Costa Group. This is an example of a company where I made a buy based off a good financial signal and a technical signal, and that was the half yearly on the 28th of August. I waited a few days. I was going to be a little bit patient, so I waited until 2nd of September, and I made a purchase of 360. Timing could have been a little bit better with that, but the share price has been going up, and it went up pretty good this week. Share price was hanging around $4 for a long time, for about a month and a half, 2 months there, and then it's just pushed through that $4.20 range, which was a good resistance. So I'm looking at $4.20 as being a resistance level, and I might push up my sell strategy to $4.20 in the future. Let's see what happens with the share price over the next few weeks. So overall gain is 19% now, and it wasn't a price sensitive, but it is a notable announcement that Perpetual Limited has been decreasing their holdings, and it's down to 11.8%. So that's been putting a bit of a, we'll just call it a bit of a stop, a limit to the share price increasing, because they keep selling. Been selling for about 6 or 7 months now. So anyway, Red River Resources. This was a company I was really unsure about. They were trading between 25 and 30 cents for a while there, but they've had a couple of very interesting or bullish announcements, and they did release an announcement about their drilling results, and it seemed to be quite positive, or the market took it to be quite positive. Now, 30 cents was the resistance level. It pulled through resistance on high volume. It looks like on the last trading day, it's testing that, so it pulled back to 30 cents, and it'll be very important that the share price remains above 30 cents moving forward. So again, the next few trading days are very important for Red River. Overall gain at 36 cents, 36% right now. So I bought it at 22 cents. And really good uptrend at the moment with Red River Resources. This is a company, a mining company, that is in production, and that's a big tick for me. Empire Energy, has been a potential sell for me for about 3 or 4 weeks now. It's just remaining within this 35 to 36 cents range, and it's really not doing anything. So again, a potential buy. Overall gain 0%. So if I sell it, I won't make any money at this point in time. If it goes above about 43 cents, that'll be very bullish. So go Empire Energy, have a very bullish week this week or next week. And the last company is Michael Hill Jewelers. So again, this was 2 positive trading updates, and I bought it after the second positive trading update, which was the middle of October. I waited a month to buy this. I was very patient with this. You can see a really good base. So just trading between about 50 and 55 cents for 2 months there. And when they released their second positive trading update, that was the breakout. And again, as I mentioned before, when you get that combination of a price breakout on a positive news, especially a positive trading update, that usually means good news for the share price moving forward. So it's gone from about 55, 60 cents to 69 cents. So overall gain with this company, 31%. I'm very happy with that, because that's in just on 2 months of holding, 31% in 2 months. So I'd always take that. Yeah, so this is the update to the week 8 performance of the portfolio. So on the top there is the current week, and on the bottom there is the previous week. So you can see I'm doing very well. The portfolio up 3.7% in the week. The XJ was only up 1.2. So I beat the market by 3 times this week. So that's actually very good. I was helped out with the brainchip performance. So if I do take out the brainchip, I still was up 2.7%. So the big winners this week were BlueScope Steel. And because BlueScope Steel has been my most successful trade at the moment, and that's up 50%, if that does well, my overall portfolio is going to do well. So I was up 6% with BlueScope in the week, and overall that was up 9.1%. Other winners this week were Red River, Dusk. Those are the main groups, main winners, and also, of course, brainchip. And the losers this week were SG Fleet, Smart Group, and Gentrack. So Gentrack was my biggest winner last week. This week was one of my biggest losers. You can see from week to week, it's going to change who are the big winners, who are the big losers. So I'm very happy with the performance of the portfolio this week, and that continues me being very happy with performance every single week so far, it seems like. Now looking at the companies close to buying, so the 4 main ones here: Maca, SRG, Pay Group, and Dacian Gold. Now, Maca Group was a company I could have bought in about $1.20. Decided to be a little bit more patient, see if the price dropped to about $1.10. It didn't, and it just shot up to $1.50. So that's one I could have missed out on. SRG has been trading around 41 cents for a while now. That's another company that potential buying in, because it's just trading in a range and sort of consolidating in a base. Pay Group had a very bullish announcement, did a video on that, Shot up on a couple of days. It did pull back on the last trading day, so I might still buy into pay group. And Dacian Gold is the one where I nearly bought in at 46 cents, and it's rushed up to 55 cents. Now, gold or price of gold has pulled back in the last day or so, so maybe Dacian Group or Dacian Gold will pull back in share price. So even though I might have missed out, especially Macca Group that keeps rising in price, even though I might have missed out, there's always opportunities in the ASX. So even if you do miss out on a company, there's always an opportunity just around the corner. So don't regret not buying a company, because the next opportunity could be the big winner for you. So that's all for week 8 update for my momentum sentiment portfolio. If you have any comments, leave it in the comment section. Otherwise, that's all for today's video. That's all for this week. And again, I'm not an advisor, so if you do need to seek professional advice for your own financial circumstances, make sure you seek out someone who is qualified. That's all for today. Have a good day. Bye.